Hello, everybody. We're back. I'm Tom Sosnoff here with Dylan Radigan. Truth or Skepticism. It must be Wednesday at 1 o'clock. No Fed announcements. What up, Dylan?
Listen, I'm living the dream here. Picked up some Amazon calls a few weeks ago.
Oh, please. Did you really? I was bullish in Amazon.
I did.
Yeah, it was my number one play, but I was shorted today, so it didn't work out today.
I bought a small stack of calls expiring on the 6th, so last Friday.
Okay.
85s.
Oh, not bad. Not bad.
And then the 85s, but then I let them, I converted them and just bought the stock on Friday. So now I'm just long a bunch of Amazon equity. So now I can start selling some premium.
I would sell the 95 calls until my hands bled right now.
Yeah. And as an owner of the securities, it's an easy thing for me to do.
Yes, it is. Very nice.
So I'm feeling.
You're feeling a little puffy chested, are you?
Well, no, I'm cherry picking a winner to make it sound good. Is the truth of the matter, but at least there's a winner to cherry pick.
I like it.
Yeah,
I like it.
So
right. What do we got today?
So a fascinating development.
Okay.
Going back, as you know, back in 2012, I actually wrote a book called Greedy Bastards. Mm-hmm. And when you write a book like that, you have an opportunity basically to say anything you darn well please.
New York Times #1 bestseller.
That it was. And so one of the things that I said in that book, because I have very strong opinions about the tax code, because I think tax policy actually is the single most influential thing for the flow of capital. And one of my big things for years has been, I think that taxing income as the first priority in the tax policy is horribly misguided. And I think that taxing estate tax, I think inheritance tax is really important, and I think a consumption tax is really important. So personally, I'm a very big fan of a consumption tax and an estate tax, and I'm not a fan of the income tax.
Okay.
And the reason for that is because I believe that a tax is either a punishment or an incentive for behavior with money, right?
Okay.
So if I give you a tax incentive to hire people, or if I give you a tax incentive to buy a building, then more people will hire more people and they'll buy more buildings. And if I give you a higher tax bill because you bought a building or hired a person, then you'll hire less people and you'll buy less buildings, right?
Okay.
Is my fee.
I accept the premise.
And so on that premise, I'm like, well, taxing income reduces the incentive to generate income and increases the incentive to try to play games and get passive income or do the carried interest loophole, or any way to generate income that's not W-2 income is incentivized wherever possible, because income is the thing nothing is taxed in America more than income. At the same time, we claim to have tax benefits for investment, like capital gains over time, but we don't. Like our tax code is set up basically in a way that the consumption, particularly excessive consumption, expensive real estate, expensive cars, private airplanes, big boats, these types of things, there's no tax penalty for that whatsoever, right? There's no consumption tax on buying an expensive thing. And I actually think consumption tax is one of the most appropriate taxes that exist, particularly above. I can understand sort of carving out some minimum clearances for the consumption tax so that it's not regressive. You're not making people overpay for groceries or gasoline or basic living expenses. I understand carving that piece of it out, but I believe that above that consumption tax probably should be the #1 tax that exists, in my opinion. because I want to incentivize income. I want to incentivize a bit of business formation. I want to incentivize activity. And if I have a tax on consumption and a tax benefit for investment, then I drive that money that's being generated into new business formation, more startups, more hiring, more investment across platforms like tastytrade for that matter, and less use of that money just for pure lifestyle and consumption. If you want to use it for pure lifestyle consumption, no problem. But I believe that there should be a tax for that, because that's the use of that capital doesn't really benefit anybody other than you as the individual and maybe the vendor who's selling you the boat or the house or the Lamborghini or whatever. So that's my personal logic on why I have a bias towards consumption tax against the income tax. And so I actually found it oddly, it's very rare that the Republican Party of the modern day does anything that I agree with. And so when I saw the Republican Party suggesting that there should be less of an income tax, or even no income tax, I think is a stunt, but still they said no income tax and just a consumption tax. And so a couple things. One, do you actually think there will be a legitimate debate on tax policy here, or is this all purely stunting from the Republican House? And two, do you think, I know that you agree that there should be some different, that a proper tax policy debate is in order, much beyond income and consumption, going to the totality of, whether there should be a wealth tax for all these other things. So I would say a few questions. One, your opinion on consumption versus income tax as advocated by today's Republicans, or the Republicans of today. And do you think that this is maybe an opening for a tax policy debate this year in America?
Okay. So I have long been an advocate of, I've long argued that at some point in the very near future, we need to address the tax code problems in this country on multiple levels, on a corporate level, institutional level, whatever you want to say, on a professional level, and on a consumer level. And they all need to be addressed, rewritten. We need to essentially rip it apart and start from scratch. But there's, of course, there's larger fundamental issues, everything like that. Getting to and we can address that in one discussion. But getting directly to the comments that you just made.
My endorsement of the consumption tax.
Okay. The consumption tax, first of all, the consumption tax is a joke, because the consumption tax will never, ever fly in this country, nor do I even really think it is a platform piece for the Republicans or any political party. I think it is merely just it's essentially a teaser thrown out there to say, hey, we are serious about addressing problems in the tax code, but here's our insane, I shouldn't say insane, that's not fair. Here's one way we're thinking about it, which I think they realize.
It's a provocation to invite a conversation that will never happen.
That's exactly right. It's just so that they can say in a speech in a campaign speech down the line, hey, we tried, but we got shot down. No, I do not.
And I accept that. I completely agree with what you just said.
That's the only reason it's brought up. It's not even viable.
But do you think it's a gateway to an actual tax policy debate this year, or do you think that that's not even going to happen?
If your starting point for a tax policy debate is based on a consumption tax, it's never going to happen. And the reason that you do that is because you really don't want it to happen. But you want to make it look like, hey, we tried. Why
do you think the consumption tax is such a non-viable, not going to happen? Like, why are you so pessimistic for its legitimacy?
Because it's not the way our society doesn't work around like consumption tax logic. It's not built into our culture. It's not part of any part of the way we think. It's never going to happen. A consumption tax as the primary tax vehicle is never going to happen. Could there be a consumption tax on top of everything else? Sure. But there's never going to be a consumption tax as a replacement for a tax system. Listen, we have a very
I mean, if I said to you, okay, Tom, for every dollar you make, instead of paying 40% of it in income tax, plus minus, I'm going to give you back, 25 of that. I'll give you 25 percentage points. So I'll take your income tax down to the 10 or 15% from 40, but I'm going to charge you a 20% tax on everything you buy.
Yeah.
And then if you use the money, instead of just to buy cars or whatever, and then rather invest it in more of your fabulous companies that are so wonderful and create all these jobs and do all these things,
yeah, sure.
You have more working capital because you retain more of your income to create businesses. And in the process, you won't have to pay, your tax bill will go down and you'll be a bigger creator of enterprise and jobs and blah, 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 blah.
Blah, blah, blah. Because that's not the way.
Extremely logical and appealing.
It's not because it's not logical and it's not appealing and it's not the way our society works. Because if you go to places where they have effectively some forms of a consumption tax, okay, everybody hates it. And
right,
there's
but the places where they do it are also places that still hold a high income tax. So Europe has a consumption tax, the VAT, but they also have massively high income tax.
Yes.
So like, of course you hate it because it's another tax. But if I give you a big tax benefit,
well, their consumption tax is a little different, but yes, they have it. And there are places that have variations of consumption tax. Like, sure, I mean, we can all go do what Singapore does. And in Singapore, you pay a high income tax. And on top of that, you will pay $200,000 for a $30,000 car. You think that's going to fly in America?
No, but that's not what being suggested. I'm saying
that's essentially that's what it becomes.
I'm taking you're putting words in my mouth and you're putting words in the Republicans' mouth. What we're saying is reduce the income tax.
I got it. I understand.
And then you're giving me examples of places with a high income tax and a high consumption tax, which is the worst of all worlds.
There are places, I'll give you other places. You tell me how great their economy is. Let's look at Russia for a second. They have a
come on.
Hold on. Before all this stuff, they have a 14% income tax and essentially a consumption tax on luxury goods. How does that work? Do you like paying $200,000 for your $50,000 car on top of your 14% income tax?
What's the point of that even at that conversation for 10 reasons, not the least of which is
I'm just saying it doesn't work. It's like if you want to address the tax code, then you take a step back and you address the tax code intellectually, logically, statistically, okay? And you just tear it apart.
Like what I'm doing right now.
No, that's not what you're doing. That's adding a new element, which is consumption. People aren't used to paying consumption tax in this country.
Well, sure they are. They pay a sales tax in Chicago. You pay a sales tax.
Sales tax is something that everybody just
That's a consumption tax.
That's not a federal tax.
It's a consumption tax.
It's all right. Then we're pushing it to the limits. If you're calling sales tax a consumption tax, then that's a whole different story. But
how?
What do you mean how?
When you buy something, do you pay a tax?
Yes.
That's a consumption tax. Whether it's a state consumption tax or whether it's a federal consumption tax is a nuance that is irrelevant. If I'm a human being and I have $1 and I have to pay 10 cents of that dollar in my consumption tax, whether that 10 cents is paid to New York State or Illinois or California or Washington, D.C., I don't care. I just know it's 10 cents less for me.
I do not believe in any stretch that this country is ready for an across-the-board consumption tax to replace a federal income tax. And I think in the process of doing that, you are going to create a situation which makes any revision to the tax code highly unlikely to succeed. And then you're just wasting everybody's time. What bothers me more than anything else is a time suck, is resources and wasting time to go somewhere where we know it's not going to get done. Listen, we don't have the perfect.
I agree with that.
Okay, there's a lot of things that are broken. Our political systems are broken. You know, our two-party system's broken. Different levels of our government, of our court system, lots of things are broken. But you can only make certain subtle changes. And even if you're going to rewrite the tax code, you're not going to, you're going to change certain things, but you can't just go break the whole thing up and start over again like you're building something from scratch. It's never going to happen. We're just going to sit around. We're going to be like, okay, great. Nothing, absolutely nothing happened. I mean, we can't even fix healthcare. Okay, basic stuff. And you want to change the tax code to a consumption code? I mean, it doesn't work.
I just had a moment of optimism that maybe that maybe there would be a legitimate discussion about the tax code this year.
And if you do that, the other problem with the consumption tax is if you do something like that, how are you really changing the tax code at all when it comes to corporations, where that's a major part of the problem is,
agreed.
So it's
a distraction. So what you're saying is also it's a distraction from what would be the first real target, which would be the corporate tax code.
Well, I mean, if you're talking about the smallest number of players with the biggest potential impact, it's the corporate tax code. I mean, there's the smallest number of huge players with the biggest potential revenue source out there, and it needs to be addressed. You go for that first. It's the smallest number of players with the least amount of leverage because they don't have votes. It can't hurt you. Okay, so it's the most big players, smallest amount of political leverage, and the most amount of potential revenue. You go there first. And you take care of that, and you fix that.
And we all know the reason you don't go there first is because political campaigns are financed by corporations more than people.
Another. So easiest way to, you can address that, and then you eliminate that corporate leverage. The next thing you go after is the wealthiest 1%.
With a wealth tax, a billionaire tax, or whatever you want.
Of course. And again, for no other reason than this is why when
the most money from the smallest, it's the most efficient way to get the most money.
That's exactly right. That's why, when Trump came in and he changed the tax code for corporations and for individuals, and that impacted the wealthiest corporations and the wealthiest individuals the most, because it was the easiest win. He knew that. That was the smart play. He went for essentially the lowest hanging fruit, which is the easiest thing to do. But and
he did it in a way where he reducing those numbers.
I understand, but it doesn't matter whether you reduce it or you raise it. It's
the biggest piece of meat on the plate.
Exactly, and that's where you go first to make. That's what he did, which is the smart thing to do if you want to make that change. I'm
just saying that I actually think the income tax technically is the biggest piece of meat on the plate. It just has the most interested parties that creates vastly more complexity
and more political risk and more leverage and everything else. So
but what's the political risk if I say, Tom, I'm getting rid of your income tax?
There's no political risk if you say, Tom, I'm getting rid of your income tax. I mean, that obviously there's no political risk.
Say, thank you, Dylan.
Yeah, right. I mean, that's not a risk.
And now I'm going to institute an across the board 20% federal income tax.
But then if you turn around and say, but I'm going to charge you, $10,000 a year to send your kids to public school, $10,000 a year to have your garbage picked up, $10,000 a year for your contribution to the police, to fund the police department in your local town and whatever else it is, and your contribution is going to be $65,000 a year, and you're going to go, well, in taxes I only paid $32,000 last year. Then it's going to be a little uglier scene. But that's why these suggestions are so outrageous and they don't make any sense to me. Like, that's not how.
Which ultimately, it's just smoke and mirrors to do nothing.
Of course. So the way you address the tax problems in this country are you start at the corporate level because it's the easiest spot. Then you go to the wealthy, and then you go to the consumer, or the masses. And you have to just tackle it within the limits, within the fences that you've already built, because you can't break it all down and start all over, but you have to make subtle changes that add revenue, that simplify the system. Got to simplify the system. Add revenue, simplify the system, and make everybody pay their fair share. That's it. It's simple.
I'm going to flip around. And so the greatest beneficiary of the tax, because I think the individual is by far the biggest victim of the American tax code. I think the income tax is excessive. I think that it's just that if we tax the middle, the sort of the aspirational youngster who tries to get ahead pays a higher tax on their relative income than anybody who's rich or poor. And so in a country that claims to have if you can make it here, like that it's the home of the American dream, and whether you're a kid from rural Kansas or from remote parts of Oregon or wherever, and you're like, yeah, I'm going to go to LA or New York or Chicago or St. Louis or Houston and work hard to make money, no one has a bigger tax headwind than those people, which is directly antithetical to the very exact premise of the concept of getting ahead in America, whereas the wealthy, obviously, and the poor people don't pay taxes. And you find yourself in a situation where the only possible solution is to address that issue. Like, why would the country that claims that it's the home of the American dream be the country that also puts the highest tax burden on people that make between, let's say, $200,000 and $10 million in income, not an investment, which is sort of the income range of people that are working their way up, whether it's in the energy industry or in the healthcare, whatever it is. I don't understand why we've always had the most aggressive tax punishment for people trying to generate income from nothing. I don't understand it.
Yeah, I mean, I don't think that situation is unique to America. I don't.
Yeah, fair enough. But America is unique in its propaganda that you can get ahead in America if you work hard.
And you don't think that's true?
I think that is obviously true in terms of the nature of the contract law, availability of capital, liquidity, great universities,
Sure.
Cool companies, all those things I think are true. But I think that the tax code specifically punishes that and rewards already being rich or having no money. But generating income is one of the greatest tax targets in this country, which is a betrayal of the American dream, in my opinion.
One of the issues that we have is, we've talked about this before. Unfortunately, the way we fund our political systems and the nature of how powerful the corporations and the wealthy are with respect to funding of those political organizations, it really limits the incentive for changing the tax code. And it's like that everywhere around the world, except other places have, a stronger commitment to individuals than we do, to the individual consumer. It would just, it's just, like, it's been broken for so long that we keep putting Band-Aids on something, and it's not going to get better by just adding more and more Band-Aids to it. Somebody's got to tackle it. I don't know if anybody has the guts to. I have not seen any politician on either side of the aisle have the guts to tackle the tax code. We don't have the brightest minds, working for us in politics. That's all there is to it.
So on the flip side, I'm just going to go hyper. Instead of my sort of naive, aspirational wishes for taxes, I'm going to flip it over now and go hyper cynical and say, if you assume that the tax code will always benefit the most wealthy and the most powerful corporations, that whether they should or shouldn't, that the wealthiest and that the most powerful corporations will always be the greatest beneficiary of the American tax code, is that a relevant reason to be bullish on large corporations just from a pure investor standpoint? Like, I don't think that health insurance companies should control the American healthcare system, and I can write a 1,000-word essay about why I think that. But I also think you're probably better to own health insurance companies in America than I think the probability that private health insurance goes away anytime soon is non-existent. And so I just wonder if you accept the cynicism of the structure that we're talking about, is your only way to play to get long the con, basically.
it's the age-old debate. I mean, that argument, I mean, you can take that thing in 20 different directions. You can almost apply it to any industry, and we can get stuck in a crazy loop. America's the greatest country in the world for a lot of reasons, and it has a lot of really bad qualities, but our good qualities outweigh our bad qualities, which is the really cool thing. And in the rest of the world, there's a lot of places that have a lot of good qualities, but they don't have a lot of great qualities. And they don't have a lot of opportunities. So like you pay in this country, we pay a very steep price for that, for what we call kind of that the upper end, or I should say like the outside of the upper end of the distribution curve. We pay the steepest price, but we have the most opportunity. In XYZ country, there might be opportunity at that upper end for 1%. And in here, it's for 15% or 17% or whatever the number is. And we also have the darkest 15%, whereas other countries, that might be only 1 or 2%. So like we pay a huge premium for an opportunity to avoid mediocrity. And that is a really cool thing about this country. And I don't know if I'm not going to argue that that's a bad thing, because I don't believe it is. I actually like that part of it. But we don't have, we have some broken systems. And I don't know where to start, like I'm not smart enough to start.
Well, I get it. And I don't want to, of course, I mean, listen, I understand that, but the thought that sort of kicked into my head, and just from this discussion with you, which kind of goes to, like, we had a conversation on this podcast sometime in the past 3 months. I think it was because when there was a hurricane or something in Florida, and we were saying, well, where do you come down on like market pricing? Is it gouging for bottles of water or hotel rooms or whatever in a disaster? And you're like, oh, well, you shouldn't, that shouldn't be, like, there's a moral spectrum of where price, whatever. But I would say the other side of that, which kind of is where I just ended up in this conversation today, is if I accept that whatever this is, it is, and I'm amoral. I'm not saying whether it's good or bad or whatever it is. I know for a fact that the largest, wealthiest institutions will be the greatest beneficiaries of the tax code. And I know for a fact that those who sell water in hurricanes will be able to charge $100 a bottle, whether you like it or not. But it brings me back to your mind as an investor and sort of how you advise other people as investors when it comes to positioning your own personal investment resources in a way that are it's sort of like, it's another version of like, would you want to buy the tobacco companies? Like investing in things that are either corrupt, malignant, or bad, but also the things that are the profit centers in a given situation, like the private health insurance companies, or everybody that has paid 3 seconds worth of attention to anything can come up with 10 examples of this. But I'm interested in how you're how you navigate your perspective on putting money against things that you morally are like, this is terrible, right? Like whatever the thing is, right? But as an investor, it's where the return is today. And my job as a capital manager is to generate a return, not to have a moral opinion on, private health insurance.
Yeah, that's such a tough subject, for any.
Of course, it's tough for everybody. That's
As a trader, we are able to. As a trader, I'm able to block it out. So as a trader, I'm able to. I don't see any color when it comes to a tradable asset.
You're like, oh, Apple's using Chinese slaves, we can't trade it today.
Exactly. I don't think about things in that sense. I don't, as a trader, every single every instrument to me is basically in play. So I don't think of things that way. But as a consumer, maybe I think of things, maybe there's a little bit more. And as somebody that likes to have an opinion on things, I definitely think of things, that way.
Yeah. As an old man on the front porch, you'll give me every opinion in the book.
Exactly.
As a trader in the pit, you don't see more. All you see is liquidity and math.
Right. Right. I
And as
just
a
see
consumer, you're
opportunity.
somewhere
I
in
see
between.
opportunity.
Right. And as a consumer, you're somewhere in between.
Exactly. And I don't think, I think the reason other people think differently is because they have other jobs. If they were a trader or they were in this business, they would think the same way I do. But I don't, I have to. It's the commodity with which I live. But I don't. And I think if I was doing something else in my life, I might think the way they think. But I don't, because because I live in this world. So.
So then, as a consumer, let's talk about your Tesla and the revelation of the cobalt slave mines for lithium batteries. Does that affect your view of EVs?
That doesn't. Other things do. I mean, Elon, when I bought my first Tesla, I thought Elon was this really brilliant entrepreneur that I felt his mind. I believed the hype that maybe this guy's mind is limitless. Maybe this is, maybe he is, and he has proven to be a generational, a generational superstar in that regard. But when it came down to recently, a lot of his politics and a lot of his the way that he's handled Twitter and things like that, and some people that I don't really like, and empowered them and emboldened them. Sometimes I feel like I'm a traitor.
But are you feeling like, I would always trade Tesla stock and options as long as it's liquid?
Oh, I won't hesitate. I won't hesitate for 1 second. I wouldn't.
But I might not buy more Tesla cars.
Exactly.
And on the front porch, I'm going to tell you, this guy's a full-on loonbird.
Yeah, of course. But I trade Tesla. It's the most active underlying I trade.
And much to your profit, I suspect, seeing how you've been somewhat skeptical about the whole situation.
It was our best performing stock last year, but whatever, it doesn't matter. That's not.
But I want to talk about that because it was my best performing stock last year. Surely not to the scale it was yours, and I still screwed myself because every time I would be right and Tesla would go down, and I'm jumping around, but being a little nonlinear today, but it's fine.
That's fine.
Every time Tesla would go down a little bit and I'd make a little bit of money, I would close it out, and I would always close it out way too soon.
Everybody does. I mean, that's the nature.
That's my point. Everybody, so how did, because there's all the Wall Street leaders sell your losers and let your winners run, these sort of sloganeering cockamamie. But I have yet to find somebody who is actually willing. The only people that let their winners run are people that are dead and forgot they have the account.
You're preaching to the choir. I've been saying that for 100 years. But I mean, listen, Tesla has liquidity. That's the liquidity in Tesla as a trader it's deeper than Apple, and it's deeper than Apple. It's deeper than Amazon. It's the best trading stock in the world. I mean, there's nothing even close to it.
But again, do you have any advice or insight on, or do you, in other words, any insight or advice relative to the continuous remorse one might feel from closing winning positions and then watching them?
No, that's absolutely ridiculous. I mean, I've been closing winning positions and watching them go, 10, 20,
wild.
50x the same way. And, but you forget, Dylan, when you close a winning position and then it goes the other way, like it would have turned into a loser, you immediately forget that in your brain. Your brain washes that out. You never say, oh, that was great. If I'd held it, I would have lost. You never, ever, ever say that because you just assume as a winning trade, I don't really care what happens next. So it's only the winners that continue to go your way that bother people. Yeah, that burn your ass and that bother people. So I don't, and I've been listening to war stories about trading for so long. I don't really care. I don't listen to anything anymore. I don't care. It doesn't mean anything to me. But I think the argument of, would you trade Tesla? Yes. Would you buy a Tesla again? I don't know. But would you say something nice about Elon Musk? No, not at all.
Do you think that you reflect the majority of the
No, I don't think I reflect necessarily the majority. I think I reflect a good portion of the people. Maybe it's half. I don't know.
I mean, you think there's some people that won't play in Tesla because they think it's run by a nut job now?
Yeah. Oh, there's definitely some people. I've read a ton of articles on that, but I also think there's people that will buy Tesla because they think, hey, this nut job is my kind of nut job. Listen, I'm okay with that too. I got a buddy that would never, ever, ever, ever have bought a Tesla ever, because he's like, I don't like electric cars. I'm all about, gas.
Give me the combustion engine. Give me the, 12.
Yeah. And then once he bought Twitter and opened Twitter back up, he's like, I'm really thinking about buying a Tesla. I go, what the hell happened? I'm like, he's been my friend for 37 years. He's one of my oldest friends, like 38 years or something like that right now. So we just laugh about it. I'm like, you're out of your mind. He tells me I'm out of my mind. I go, let's just change cars. Here, take my keys.
I'll give you the Jeep. You can give me the Tesla.
Exactly.
Whatever.
Exactly. We come full circle in a week.
Are you encouraged by the temperament of the financial markets at the beginning of this year? Or is it meaningless? Like, in other words,
no, I'm very encouraged. I think the financial markets are, I love free markets. And the beautiful thing about free markets is that it completely wipes out all the bullshit. So the world is full of crap. We have bullshit here, bullshit there. Everybody's full of crap. And everybody bullshits everybody, like that is the world of media, of politics, of all the stuff that, all the garbage that's out there, half of social, everything. Some of it's fun, some of it's mean, whatever. Some of it's valuable, some of it's just nonsense, but everybody's got a story to tell. And you don't know what's real anymore. You don't really know what's not real. You don't know who's being really honest. You don't know who's just selling stuff, whatever. But financial markets are so pure. They're pure. Hey, you know what? If I want to buy, what's Tesla worth right now? Well, it's worth 121.82 because that's where it's trading. And I can buy 1,000 shares there if I wanted to. So I can spend $121,000 on a penny wide market, and that is the real freaking market as of this second. And so the financial markets are always telling the truth. They're not capable of anything but the truth because it is such it's like throwing, instead of throwing up 10 pennies, you're throwing up 100,000 pennies up in the air. And when it all falls down, you're going to end up with basically 50-50 within a few coins worth, because you threw up 100 coins in the air. That's what the financial markets are. You're going to end up with exactly what it should be at the end of the day, because there's just too much mass size out there and there's too much money.
Which brings you back to your most fundamental existential trader, like it's the reason everything you bet, not just you, but like the company.
Of course, yes, exactly.
Odd odds is the only way to make a decision is not based on your opinion. It's not based on anything other than the ratio of the payout if you are right in either direction. It's just
I wrote about it.
I took credit for that. I read that. And I was like, I did that.
Exponential opportunity, Mr. Radican. Exponential opportunity.
I read that. I took personal satisfaction when I woke up and saw that, because I felt responsible. I felt like I felt that you felt. I felt because of I think it was our last week. I felt you were compelled to make it very clear to everybody that the only thing you can control as an investor is the pot odds of whatever you're doing.
In a very,
along with liquidity, I would say, or
in
whatever,
an efficient marketplace, of course.
Yeah.
Now, I mean, you can easily say here, like, and I was really trying to make a case for digital assets, because they're cheap relative to where they've been. But you can make an argument for lots of stocks. You can make the same argument for Tesla, since we're talking about it. But there's a lot of downside on a $121 or $122 stock, but you can still make the same argument. And listen, we can go lots of places with this, but I guess my point is that that's what I love about the business that we're in, is that it cuts out, there is no bullshit, because everything is tradable. This is not Dylan Radigan making a market. Which is what always used to, when we first started Tasty, or I don't even remember, it was before Tasty, whatever it was. What used to drive me crazy is when some analysts would come out and say, I think the Dow, I think the first guy was Jeremy Siegel, who's the
Wharton man, Mr. Wharton.
Yeah. It's a Wharton. He's a professor at Wharton School of Business.
Likeable fellow, smart gentleman.
Yeah, smart guy, likable guy, sure. And one year he came out, and I think I want to say that the S&Ps were trading around, let's say, 15,000, right? And he said, I think they're going to 22,500, 750 points off, 50% rally. And it drove me insane, because the statistical chance of that happening was like 1.5%. And I'm like, you don't say things like I'm like, dude, you're a really smart guy. There's actually a market out there. Like, we're not that dumb. We're not going to believe somebody that says something that has a 1% chance of happening. Like, it's idiotic. That's like death pool, talk and stuff like that.
It ignores the pot odds, which even I understand.
It ignores everything. There's nothing to it. It doesn't mean that it's the dumbest thing in the world. You want to say we're going higher? Fine, say we're going higher. I don't care. You want to say we're going up? It's inside the range. Just give me a real number. Like, we got to get out of this mode of like people just saying ridiculous things. If you want to say a ridiculous thing like, let's charge a consumption tax, then say it, because you have another motive for it, and nobody can, it's completely subjective, and nobody can say, oh man, this won't work. Like, there's no statistical argument you can really make that will kill it. But if you're going to say the market's going to go up 50% on a year when the projected move is 7%, like, it's ridiculous. Don't say that.
The comment of a fool.
Yes. And that kind of stuff drove me crazy. And I'm like, why, who's giving this guy airtime? Like, it doesn't make sense. Like, we have to build a network.
The problem is that you get mathematically offended. Some people get indignant because you didn't say sir, you didn't say mister. You don't care if we call you sir or mister. But if you say things that are mathematically improbable, you actually take moral offense, which I find entertaining.
Well, if it was some jamoke, on walking down the street in a coffee shop and said, hey, I think the market's going up 50%, sure, I wouldn't care. But this was a Wharton professor
with big standing, and
who was being played
on a big network,
trumpeted out on a network, and then the Wall Street Journal, and then the Wall Street Journal picks it up as part of a story and says, oh, he thinks we're going up 50%. And I'm like, why are they writing this? That's like somebody saying, I think there's going to be a tidal wave off the Jersey Shore. I don't know,
I got it.
It's not going to, I don't think it's going to snow 2 inches in Chicago this whole winter. Okay, great. Nice call. Like what is this stuff?
It's distractions of fools. It's audience accumulation, I would say.
Yeah, which is the same thing as we started off the discussion today talking about.
And you're saying the Republican tax proposal is just audience either accumulation or audience distraction.
It's just a distraction because that way nothing ever gets done. It's part of the whole. It's the whole narrative. We have made. There's a lot of things broken. Okay, but. There's a lot of things broken. And I don't know if we can fix them all. We're still the land of opportunity. Like, don't get me wrong. It's still the greatest place in the world. Mm-hmm. But, we've got things we got to fix. Mm-hmm. Or you've got things you got to fix. Or my kids have things they got to fix generationally, for long-term survival. We've got things we got to fix. Mm-hmm. I can only do, I can't even change the pattern day trading rules.
I mean, we're running a long clock here, and I have a whole other subject, which definitely requires an entirely different podcast. But there's something that I call narrative coercion, and it's when somebody who's really important really aggressively asserts a narrative, even if the facts betray it. And I'll give you my example.
Okay.
Bernie Madoff went out and said, I have an investment advisory business that goes up every month and I never lose money and it's always a 15% return.
Okay.
Now, if I showed up and told you that, or Joe's Chop Shop showed up and told you that, and I said, here, Tom, give me some of your money. I have an investment advisory business.
Yeah, sure.
I would always, you'd say, that's for sure a fraud.
Yeah,
like
100%. Right.
But when the chairman of the NASDAQ, who is responsible for 10% of the market making, and who's on the cover of the Wall Street Journal, and who has what I call narrative coercion, says, I have a fund, it only goes up. Now, for sure, someone like you would be like, bullshit.
Yeah.
But the point is, a lot of people didn't say that. Smart people, because they're like, well, if anybody knows how to do this, it's Bernie Madoff. What I'm talking about is the phenomenon of narrative coercion, whether it's Elon Musk is like, I have figured it all out, and so Morgan Stanley's like, all right, well, you want to buy Twitter?
Well, but hold on, there's a big difference. One guy was a complete fraud. One guy actually figured it all out.
But I'm saying both rely on potent narrative and status to enroll people to take actions or risks that they would never otherwise take.
Yeah, sure. I mean, but it's very difficult to, like Bernie Madoff was smart. I shouldn't say that. Bernie Madoff, his grift was amazing because what he did was he grifted people outside of the industry. He didn't go in the industry. He was a country club grifter. And what he did was he grifted people that didn't really know that, like, you couldn't do that. He never went after the traditional hedge fund.
He didn't go to the quants at Susquehanna and tell them I make money.
He didn't go to the quants. Yeah, right. He didn't go to the quants at Susquehanna.
Like, come on, buddy.
Yeah, exactly. Yeah. He didn't go to any quants. He went the country club route and just found rich people that he knew through networks. I think a better grifter would be Sam Bankman-Fried. But
using narrative coercion again.
Yes, using narrative coercion. Exactly. Elon Musk, I don't know. That's a very different story. Well, because there's too many examples of just success that, like, it's hard to build billion-dollar companies. It's hard to build $10 billion companies, but to build $100+ billion companies like he's done, that's redunculous. Anyway, we're out of time, Dylan. I got it. That was great. I don't even know what we covered or what direction we went. I'm still confused.
Listen, long live the consumption tax. I'm telling you.
God help the Queen. He's Dylan Radigan. I'm Tom Sosnoff. This is Truth or Skepticism every Wednesday, 1 o'clock. Thanks so much for joining us this week. We'll see you next week, 1 p.m. Central Time. Thanks so much. Have a great week, Dylan.
Bye.